Alibaba is looking to shore up weak results in the European market by adding a buy now and pay later option. At least that's what was announced today. And so that's what I'm going to cover in this video, guys. So as you smash that like button, let me run that intro. What's up, guys, and welcome back to the channel. And this is a little bit of good news because the European market has been struggling as of the last couple of quarters. We have been talking about it. If you guys may recall, there was a value-added tax that was instilled that also caused the sales to decline in the European region, but also you have other issues going on, as you guys are well aware. And so let's get into the article. So you can see here, Alibaba seeks to boost its sales abroad with buy now and pay later. And really, it's just Europe. And so they're saying a new offering would allow AliExpress shoppers in Europe to pay for goods only after delivery. And I think that's really good because one of the other issues with buying stuff from AliExpress is the amount of days that it takes to deliver. Like if you ever purchased anything from AliExpress in North America, you are well aware that the delivery time is long. And so, you know, in a rural area in Europe, you might be waiting 20 days for delivery. So why pay for something that you haven't received yet? Pay for it after you've received it. And you know what? If you can even pay for it in increments after you've received it, that's even better. And I think it becomes a more compelling opportunity for buyers. Now, just before we get into the article, I don't think the article did a good job of showing you exactly what they're talking about. So just keep in mind, guys, this article is not talking about any of these segments or, you know, companies in China commerce. It's not Taobao, Tmall. Taobao is not selling this stuff. It's really the AliExpress sub-segment of the overall international commerce segment. So in other words, this business. And so this is what we're talking about in this video. And if you guys recall that international commerce, which of course has AliExpress and those other businesses as well, is up 4% in the last quarter and up 3% in the quarter in the first 6 months of the year. But this looks a little bit better than it really is, at least for Europe. And you have to go into the details to sort of figure that out. Now, that's something that I cover and I break down when I do the Alibaba quarterly analysis. And I really encourage you guys to take a look at those when they come out. But I just want to remind you guys what happened with Europe in the last quarter. Now, if you recall, with their international commerce business, they did have good results with Lazada. They had good results with Trendyol, which they call out specifically here. But notice that part of their good results were partially offset by a decrease in revenue due to declining orders of AliExpress, which was a result of the depreciation of the euro against the US dollar. But also, they probably should have added in that value-added tax issue as well. And so, you know, I don't think that this scheme that they're coming up with, this buy now, pay later, is going to lead to a surge in revenue that some people are expecting. But I do think that it does have the potential to appeal to many consumers and will likely lead to more favorable results. So it will lead, in my opinion, to an uptick in sales, but I don't think it turns around this whole segment. I think you really need Europe to recover for that to happen. But, you know, let's see how this plays out. And so with all that preamble, here's the article. So on Monday, Split It Payments said it would join with Ant Group's Alipay to provide a delayed payment option to customers of AliExpress, an online marketplace operated by Alibaba outside of China. And so essentially what's going to happen is they're going to first roll out their service in Germany, then into France, and then to Spain, and then into France. And then they could expand to other international markets as well. And so, you know, the other thing that I did mention earlier in this video is recall, guys, that most sellers on the platform for AliExpress are China-based businesses, and their international shipping times are long, which does become a deterrent to shoppers because you don't want to pay for something and then, you know, not get it for 20 days. If you don't pay for it and then you pay for it as soon as you get it, that's at least a little bit better. And I think the article almost got there, but they said demand was hurt by the weakened euro against the US dollar. That absolutely is an issue. Changes in the European tax rules and supply chain and logistics disruptions. I felt like they could have gone a little bit into more detail here and discussed the value-added tax rule changes because, you know, I even needed to remind myself what those were. And so if you have not understood or you don't understand what those are, just look up value-added tax rule changes in Europe and you'll figure it out. Now, of course, this is in line with Alibaba's three-pronged strategy, which is something that we've discussed previously, which is that they're going to be focusing on globalization. And this permeates not just in, you know, like their international segments, but also like, for example, cloud, they're focusing on globalization in that segment as well. And then alongside, you know, globalization is the one strategy alongside with consumption. Obviously, that's domestic, obviously international as well, but mostly like, you know, increasing domestic consumption. That's your China commerce business. And then, of course, cloud computing, which, of course, hits both because you want to increase or build out the Chinese cloud business, as well as you want to build out the international cloud business, which Alibaba Cloud is making strides into both. And just a reminder, guys, that the international commerce retail business is about 5% of the company's overall revenues, but look how fast it was growing historically. And even last year, full year, it was a shining light for the company as a whole, where it grew 24% relative to the overall revenue growth of 19% or 18.9%. So it is a shining light for the company as a whole. But I do want to remind you that the international commerce retail business is struggling. And so notice that I'm forecasting it to finish this year, fiscal year 2023, at 0% growth year over year. So not good, not bad. And then, going forward, I'm only forecasting at 7.5% for the next 10 years. This is one of those segments where I say that I might be extremely pessimistic on the revenue growth here. You can absolutely get back to, double-digit growth for international commerce, especially with Southeast Asia. And now you got this buy now, pay later scheme. I don't know how much it offsets that value-added tax headwind, but, I think 7.5% might be a little bit light. You guys let me know what you think about this segment specifically. I haven't really had the best idea on how to forecast it out, so I have been pessimistic, but I'm interested to know what you guys think. And so let's get into the valuation. So you can see that Alibaba, I'm valuing the company at approximately $230 per share. So it's trading at around 50% of its intrinsic value, because the shares have run to almost $20 per share. Now, this is the tracker that the Patreons get access to. I've grayed out other securities that fall into here, but I just wanted to show you another one. So, Meta Platforms, the price is $137 per share. So it's really run up, and, it's trading at approximately 80% of its intrinsic value. It was trading very close to, I would say, I think like 60% of its intrinsic value not that long ago. So Meta has really run. And that was a company that I was talking about on this channel, basically just banging the desk that, the company's not dead, and they're making investments into revenue streams that will monetize and will materialize over, the next few years. And so I'm glad that the market sort of picked up on that and brought the company back up. Easily this is, I would say, at least $150 to $175 per share stock. Now, if you want access to the model and all the models that you can click into once you get access to that tracker, you can get access to all of that at the lower tier. Now, if you want to join us for an epic live presentation every month, you can join us at that higher tier. Now, if you want to get an idea of 3 stocks that have been absolutely surging over the past little while and sort of what I think about those securities over the next little bit or the near term, you can get access to a video that I put out on just that right here.